Welcome back, Cutie Pie. You have joined me. So let's talk about the potential Fed pivot that's coming up. And if you want to be a strong hand, you have to think about future expectations, all right? So I'm giga long, mega long, 100% long, and I don't want you to play with sidelined money right now. I am holding everything long because I only want to sell if we see crypto tourists come back and them buying at stupid prices. So it's not enough to see tourists come back by themselves. So if you just see people getting excited because of a green weekly candle or a green monthly candle, that's not enough, okay? I want to see more. I want to see something actually set up. Because if something sets up, we're probably in for a rough ride. And we're probably going to have to be wearing our cotton woolly socks for like another 3 to 9 months, which is enough time for crypto to dip back down and you to deploy again. And how much would I cut? It's not too much, man. So if you were holding a portfolio and we had some massive recovery, don't worry, we'll go through the charts, we'll look at them. Maybe get out if you're nervous, 10%. If you want to get out more, 25%. And you just leave it on the sidelines and you go, well, I'm just going to get a dip no matter what, you know? So where's all the content coming from? So I have a post here, right? A juicy post. Follow me on Twitter, bell notification on YouTube as well. So please like, subscribe. The Fed pivot is historically poopy. Okay, but we're going to go through some juice now. However, they can hold rates for some time. 6 to 12 months where the market front runs rate hold and rallies. This is the juicy part, friends. Pay attention. In 1980, the Fed pivot adjusted rates downwards. All right, we're going to listen to this part. They adjusted rates downwards. As the CPI crashed, stocks went up. Okay, no one's talking about this. No one is talking about this. I am your friend. I've confirmed it. We've signed the contract. No, this is crazy. I listen to a lot of different like stock market guys. I get a feel what the boomers are doing, yeah? The people who hate making money, that's right, in stocks. That they are not talking about this. Okay, this is the amazing part, right? So I've said here it's going to be a tight one. So let's actually go deep what I'm actually talking about. So let's go from right to left. Let's go from today. So you have a Fed pivot here, right? So basically a Fed pivot, so there's two names, right? I call the pivot the hold. That's actually what you want, right? That's where you make money because when they hold rates, the market front runs the next move. It goes, okay, if you're holding rates now, your next move has to be a cut, which means they buy bonds today. The bond yield goes down, and so people don't have anywhere to put their money for the next, 6 to 18 months. So they have to throw it in somewhere. And traditionally, people throw it in the stocks, risk assets, and what ends up happening is eventually something happens, right? A car crash happens, you know? Not the metaphorical one from crypto, the economy tanks. So that's the Fed pivot. Now, look at all these examples you have here. So they hold rates and then, the economy's tanking, right? Here, hold rates, tech bubble, same thing, you know? So we had the zombie virus, we had the GFC, we had the tech rates. This is where we start to get a bit ding-dongy, all right? Look at this ding-dong here. So this is interesting, right? Look at this part. So you have the 90s. This was the tech run, okay? Now, I want to step back in time here. You don't know how much Microsoft and Apple's going to change the world. You know, something's going on with tech, but you don't really know it, right? So the actual run, this first part of the 5 years, we don't know where we are in the context of this versus crypto. Are we at the beginning of that? Are we at the end? We got no idea. I'm a bulltard, so obviously I think we're towards the earlier part because I think crypto's only, it's only 1 trillion, man. It's nowhere near big enough, so eventually it's going to get bigger. So the tech run, I want you to understand, this tech run was freaking huge. This tripled the NASDAQ, even more, man. This was literally the birth of the internet. It's a fourth industrial revolution. Really, truly it was, okay? And it added so much value to the world. Think about it, right? I'm speaking to you through the power of the internet. So what ended up happening was, right, there was an adjustment period, right? So they held rates here and the market went up. Think about that. So this is One scenario in history we're looking at, we're like, hang on, they actually held rates and the market kept going up, So that's something to think about, right? Now, you won't hear this or see this because most of the macro people, they are boomers and they're doomers. So they're in US dollars and they want a big crash. It's funny. If you want a crash, come to crypto. We got retards selling everything minus 99% just because they feel bad, right? They have no sense of value. They just want to get out just because of, they just can't stand themselves in the mirror anymore, okay? If you want to buy dips, man, you come to the best industry growing, in the world. I don't understand what they're doing. They're waiting for like this 16% dip in Coca-Cola. Oh, wow, did you get that 16% dip? Wow, price to earnings. Oh, it's funny, man. When they finally figure out crypto, it's just going to be so funny, and then it'll be too late, right? So let's mark this in blue, okay? This is the first time where you're like, hang on. There is a Fed pivot here, and it wasn't so clean, okay? Look at this part. See, they held rates. They didn't really need to cut too much. Think about that, friends. Like I'm just thinking, the rates are like going to go to 4.5% here. What if they go down? What if the Fed needs to only cut back to like 3.5%, okay, and then just hold it? Because that's what happened here for like 4 years, man, 4 years, and then look what happened. We had a blow off top for the stock market. No one's going to talk about this scenario because no one can even dream of this scenario here, So that's another thing, right? And we go back even further, okay? Let's go back even further. So you have this period. What about here, man? There are periods here where, look at this. This period, they've actually got Fed pivot up here, right? But this period here, CPI was very high. So CPI was so high, exactly here where I've got here. 1980 comes in, Paul Volcker, central banker. He goes, you know what? Fuck yous. I've got to hike these rates above inflation and I've got to murder inflation. And he did. He murdered it, right? And he murdered the economy with it. However, look at this rate cut part after. So, it was actually funny. When he did it, the market rallied. That's the funny part. Look at this part. See this? The market rallied. You're thinking, what the hell? He put rates so high. How come the market rallied? And that's because this 10-year period, the stock market, after inflation, was down like 75%. I'm not even joking. The stock market went sideways for 10 years and inflation was like 7% per year. Can you imagine that? You literally got absolutely murdered beyond imagination. So when finally inflation came down, this was seen as like a relief. Now, but you can go back in time, you don't know what the hell's going on. You're just like, you're living day by day, man. You got your wig, you go into the disco, you're probably popping LSD on the grass and stuff. You have no idea what's going on. So we can only look through this to the benefit of hindsight, all right? So, but the interesting part I want to look at is rates come down. So what they do is inflation's coming down, and what they do is the rate part, and they move it down lockstep. So today, inflation is like 6.5%, right? 6.5%. But I'm wondering, right, what if, because of this new CPI scam method, what if it in the next 6 months goes down to like 3%, 3.5%, What's the Fed going to do? If they're going to leave it at 4.5%, or do they do like a cut at a time? That's what is going to get everyone's ears perked up, because everyone's going to think, the Fed pivot. However, look, we've gone back in time here. Look at this period. This period, we've seen this period before, right? 1980s, where the Fed's like, hey, this ain't really a pivot. We're just magneting towards inflation. We're just like tampering inflation, However, you got to ask, man. You got to ask, because you see there's devil's advocate everywhere. I can easily say we have had the end of the fiat debt system. We have had too many low interest rate policies. There are too many debt zombie companies out there. We don't have basically capital markets like we used to. Everyone's basically weak, drink soy, blue hair, pink hair, and all these companies. There's too many zombie companies that don't even make enough money, right? And the US government can't let them all collapse, because then you'll have literally everyone rioting in the streets, and the government wants to keep everyone under control. So they're going to do whatever they need to do to keep it intact. However, we don't know, man. Is it going to jitter fast? That's what everyone's worried about. They're like, damn, man. You got 20 years of weak zombie companies. Crap, man. If you put any pressure on us, we are screwed, man. We're screwed. But I don't know, man. With these things, they have to shock everyone to screw everyone. Because if the government can see danger coming in the future, what they do is they print money and they spend and stimulate today, because they fill the gap in the future. That's why when you know about problems in the future, you can address them. Okay, and the worst ones are the ones that hit you like a shock. For example, here, the bottom of so there was a tech crash, right? But then 9/11 came and then ruined the world for another year. That's what made everything worse. Can you believe that? 2 years, 1.5 years in, and then 9/11 comes. Unfortunate event, right? So this is what we're talking about, man. This Fed pivot, eventually they're gonna have to pivot, right? So it's not so easy, man, because you think, oh, when they pivot, they start the market crashes, right? When they start cutting rates, maybe. So you don't have all the information here. Firstly, what if they hold for 6 to 12 months? Crypto can go a long way in 12 months, man. Like, can you imagine they pivot in like April this year, right? They actually hold, and then they actually hold for 12 months up until the Bitcoin halving. Man, that's a long time, friends. Like, it's like you know that the economy is going to crash, but Bitcoin, man, it can go. Bitcoin, Ethereum, all our crypto, they can recover half their bear market damage, right, in that 12 months. So it's something to think about, right? And then you also have to think about, if you sell, you're also taking the risk that, what if it's actually softer than we think? I don't know. What if it's softer than we think, friends? Like, what if, you don't know, see, you can't predict this short-term stuff too much, You got CBDCs coming. They're going to scam the CPI number lower so they can do more printing and they can hand out money. And then they're going to do the CBDCs to give you timed expiries, which means you have to spend your money in the next 30, 60, 90 days. And then if you don't, it expires. So basically, your money saved up, your currency, you can't affect the CPI in unexpected, shocking ways in a year from now, in like 9 months from now. And that's exactly what the government wants. It's more control. And, some people get upset at that, but I say, if you put me in charge, that's exactly what I do. Because I don't want you guys rioting at this CPI data number, right? It's funny enough, they should just rig that whole number like even more anyway. It is kind of rigged, but you get what I mean. So this is it. It's not, I'm saying, like, right now, see how I have all these uncertainties? I love it. I like that. I'm not pretending I'm a bull tardy. I genuinely love this because I know from my experience, when you have all these question marks everywhere, I'm telling you, market goes up. I'm telling you right now, it goes up. Now, the way it goes up, it doesn't go up like this. It goes up like this. I don't know. It goes, whoa, what are you doing? No. That's what happens. But you end up net up, from point A to point B. At the end of the year, you're up. Okay? That's why I generally love it. I know this period like the back of my hand. Uncertain times with a lot of question marks. Okay? Because I used to be a perma bear, right? I used to be a perma bear, and all these uncertain times, this is over 10 years ago, and I'm like, man, why is this thing going up? The market should go down. I didn't understand anything about money and printing and how everything's a scam Ponzi. I did not understand that. So I thought me, who could see like 15 things to go wrong, I thought the market must go down. Nope. No, it doesn't, man. And you know the game. The game is everyone's got, this is the cheats, right? Not us. The cheaters have US dollars printed, and they know that they can all print it. So then they circle it around the world, and it does laps and loops, and people take out leverage and loans, and they do stuff. And sometimes, friends, sometimes it does a little loop, ends up in your BTC, your Ethereum, right? That's what happens, and it keeps doing loops around the world. So we know this game fundamentally, but when you tell people this, everyone gets scared because they just see price go down and like, no. So that's why these things go up. And it's one thing to know it, it's another thing to feel it. So I'm telling you now, the end of this recovery wave, this mini top, whatever you want to call it, is literally when everyone says, fuck the Fed, fuck rates, we're decorrelated, bull market ahead, this time is different. If everyone starts saying this stuff, F, everything, then we'll know, hey, maybe we've recovered too fast. But right now, I'll be honest, man, I'm seeing so many question marks. I'm thinking to myself, man, there's like 6 huge question marks. We're lucky to get rid of 1, Like, please, get rid of Russia, Ukraine for us. We've still got 5 question marks out there. And that's a lot of fuel. That's a lot of fuel to keep the weekends on the sidelines. Okay? So, the Fed pivot, final summary, is not as linear as everyone makes it out to be. And there are times in history where they can pivot for longer than you think just to match the CPI down. It doesn't mean the economy is going to crash. Until next time, friends.